does that have a broader significance in the markets, or is it just a one-off?
Hopefully it is more limited. I think there's no question that without regulation, and we've all been talking about having this sector regulated, it would help it's the market itself, but also the investors going in. Having this particular FTX, which is an exchange for crypto, be based in the Bahamas with not just no regulation, but also with few people who had very limited experience in finance or in anything really, run it. I think the shocking part of it, David, was that very, very sophisticated venture firms from Sequoia and others who were invested, it was not just retail getting involved in that market. So it was a surprise, but hopefully it will get limited. And I think it has put a lot of pressure on increasing regulations sooner here. And that will be a good thing for the market. Now, let's not forget that the whole market is less than, a 900 billion. I'm not saying that that's tiny, but it's still not significant enough to create any kind of stress in the market, unless we're missing something that we don't know at this point.
I think what's important, David, when you watch that clip, and that was the absolute peak in the dot-com bubble. Yes, there was a massive shakeout, there was a massive consolidation, but I would argue the internet and tech evolved far beyond what any of us ever thought it would be in 2000. I wonder if we're going through the same thing with crypto and NFTs, that it got a great start, there is going to be a shakeout. Afsaneh is right, there's probably going to be a lot of regulation, but when I talk to the young people on our desk and our platform, they're still a big believer. And if the millennials are a believer, 22 years from now, they're going to be looking at this clip, and I hope we got it right.
That's fascinating. No question, there's a generational issue here. Let's come back to the current generation and people as old as I am. I'm older than you are, but as old as I am. What about bonds right now? Do you invest in bonds?
For the first time in a decade, absolutely. And I will tell you that we're seeing interest from everywhere now. Every wealth management platform in JP Morgan, every institutional client, they're coming to us, they're putting money in bonds, they're looking to commit more, and they haven't done so for years. If I look at where we got to at the start of the year, a general bond fund, the Bloomberg Ag yielded 1.7%. Now we're up at 4.7%. We have 3% higher yields, and that's going to track investment. And as I said, I think the Fed is close to the end. I don't know if they get to 5%. We're kind of in the 4.5%, 4.75%. That's going to bring a lot of stability to the market at these levels. Bonds are back.
So, Afsaneh, you manage a fair amount of money. What about for you? Are bonds attractive at this point, or are you just equities?
I think, as Bob said, what is very interesting right now is even in any foundation or endowment or the assets that we manage, you're finding exactly the same phenomena where people had moved away from bonds and cash, and we're all equities and private investments moving back into holding bonds. And as we're sort of reaching that 4 or 5% that Bob talked about, much more interest in bonds in a more balanced kind of portfolio. And of course, people are looking at cash with 4% with Treasury bills at the level that is much higher than cash has earned in a very long time. But I think the bigger thing that is happening in the portfolios we're looking at is obviously a lot of investors, institutional investors who've been also investing in venture, private equity, real estate in private form. And I think that is going through some sort of transformation too.
Well, let's take a segue, if we could, from that sort of investment into COP27. As we're speaking right now, it's still going on. It's going to end on Saturday. Right now, Afsaneh, you know far better than I do, it looks like it's going to be difficult for them to get to the objectives that they had.
You're absolutely right. So far as we know, tonight, the latest news was not too positive. Now things could change tomorrow morning, but they didn't really have anything major to announce. Again, as you remember in the COP26, they had the GFANs, which was a large number of large asset managers signing up to make pretty significant shifts in their carbon print. But most recently, they started walking back from that or not wanting to sign quite on what they had agreed to in COP26. So I think it's very, very important as we're having these meetings. Maybe they shouldn't be every year, Maybe they should be every other year or less often, but show some sort of progress. And the most important part of the discussion this time, David, has been the fact that developing countries, again, have felt that they are, in some cases, suffering because if they're an island economy, they're going underwater. If they are affected by droughts and by floods, a lot of it might be caused by those who did use a lot of carbon over the last 10, 20 years, and they're asking if they could get help. And that help is really not coming. And I think that is the really major summary of COP27, which is that the expectations of investments into climate are probably less than what we expected going into the COP.
Well, and just picking up on that, on the investments in it, Bob, I want to come back to you because one of the things at least I'm taking away from COP27, you can certainly listen to John Kerry, the president's special envoy on this subject. We're not going to get there from public money alone. It's going to take a fair amount of private investment. As a bond person, are there bonds that are green bonds or in the climate area that make sense as a business matter?
There are. I think for sure, if you're going to finance something, which is what bond investors do, you want something that has something of a green agenda to it. And we're hearing that from our clients. There's more and more money coming into this space. I think, Afsaneh, help is on the way for the island economies. The large-scale investors want to commit capital to this space.
Well, the Inflation Reduction Act, as it's called, a lot of people object to that title, put a lot of money into the game here on that private side of Afsaneh. Is it making a difference in the projects that are getting financed?
No question. I think the RA is a very powerful act, and it's the largest amount of money going in. And I think that will really help us in the U.S. to invest a lot more in climate-related food and ag, in battery storage, in residential, and in community-related solar and wind. So that will be a major, major push. And we're seeing, as Bob mentioned, a lot of movement. I agree with him. I think it's just that in COP, where you expected public money to go in, there was a sort of disappointment with that. But the private sector is doing a lot. The young generation is doing a lot. We just need the public sector to jump in when it comes to it outside of the IRA, of course.
Bob, last word. Are you seeing a difference in your part of the business for the government tax policy when it comes to green bonds?
We are.
Are you?
Yeah, absolutely.
It's making a real difference, you see it?
It is from our perspective. So, yeah, everything we see that, and you know, we didn't touch on the regulation. There's going to be more regulation poking through what qualifies as a green bond or not, and also, you know, to prevent any greenwashing, either in specific bonds or in bond funds. So watch this space.